One of the most common and biggest mistakes that traders fail to understand is understanding the market structure. And here I'm talking about, how the market is moving. The market always moving in higher high, higher lows, or lower highs and lower lows. Forget about the trend lines right now because this is a different story. But a lot of traders mix between trend lines and market structure. And now I will show you on the chart how to differentiate between that and how to not to fail into this mistake, which, believe me, will save you a lot of money. Let's look at this chart, and this is a DXY chart, okay? And as we can see here, the market is moving into lower high, lower low, lower high, lower low, okay? And here I just showed you the market structure. What do I mean by that? Let me even write it on the chart. So here is our lower high, okay? And here will be our lower low, okay? And here will be our lower high, and here will be our lower low. And from market structure perspective, as far as the price didn't break above the last lower high, we are still in a downtrend. Again, as far as the price didn't break above the last lower high, we are still in a downtrend, okay? And this is the market structure, okay? So we can even mark that on our chart here, that this is our, level of the market structure. We can even put it in dotted lines, okay? And we know as far as price is below this level, we are in a downtrend. The mistake that most of traders do is looking at the trend line instead of the market structure. What do I mean by that? That they look at the market, at the chart, and they see here we have first touch of the trend line, here we have the second touch of the trend line, and then they look at the third touch. Most of books and courses, they say the third touch of the trend line is the strongest touch, which is true. But also you need to keep in mind the market structure, okay? Because if we look at the hierarchy of things, what is stronger, market structure or trend lines? Definitely market structure, okay? Trend line, at the end of the day, it's only a tool, but the market structure is how the market is functioning. And don't mix between these two. It's very, very important. Okay, here, what is the mistake which most of trader does in such a case? That once they see a break here above the trend line with such a candle, they say, okay, right now the market actually broke above the trend line and it's a time to buy. Let's say that they will put their here, I don't know, entry point, and they will put their stop loss somewhere here, okay, below this point here. So below this, okay, they will put their, stop loss here, and they will say it's time to buy. And what the market did, straight away in the next candle, the market, just broke again below this trend line and stopped them out, outside of the market with a stop loss, okay? But this is a mistake. And what I would recommend you here is to always keep in mind the market structure, okay? And we know that as far, again, as we are below the last lower high, we are in a downtrend. So my advice to you is, number one, you can use Fibonacci, okay, from the last lower high to the lower low, and then you can see that, okay, in that case, we have the 78.6% FIBO level, where you could see that the price is reacting perfectly from that, okay? And from a risk-reward perspective, it is okay to use it, especially keeping in mind the chart I'm showing right now is DXY, and we had just recently news on the DXY. So you could, have your order here and just like sell. I know that here I'm talking about DXY. I'm not talking about currency pair, so you cannot buy or sell in that specific case which I'm showing right now. But here I'm talking just about price action, okay, and how you can use it, okay. And definitely, when the XY is getting stronger, so gold and the rest of currencies where you have the USD is getting weaker and vice versa. So first scenario, you could do that, okay, sell in that case, in this specific case, from the 78.6. But what I would say from even better risk reward is to sell at the equal lower high, okay. And understand that from market psychology perspective, this is one thing we can talk about in another video, that most of the time you will see that price is coming to create equal lower high and then sell, but market sometimes it's even more tricky. And what it will do, that it will come to break above here in lower time frames, okay, or even on daily time frame, and then the candle straight after it will break below, and then in that case you wait for the retest and then you can sell, okay. And imagine from that perspective, I told you, let's have just Fibonacci, okay, and let's say that you were selling from here somewhere and you had, I don't know, let's say 60 pips, just for sake of, or even 50 pips, just for sake of the example, nothing else. And, 50 pips, okay? And you say that right now the market, keeping Fibonacci extension, will go to create lower high, which has risk reward ratio of 1 to 4%. But imagine if you would sell from here, and also you will have 50 pips stop loss, and then you will sell moving all the way down to here, okay. In that case you have around 5%, you have 1%, extra profit if you will just wait and do it that way. But what I personally do is that when I have such an entry from the last lower high, okay, I even make my stop loss tighter, because I'm actually, getting from very nice point. So in that case, your risk reward is 1 to 8.2. You see the difference, guys? Okay. So in that case, by understanding the market structure, it will actually change the game for you. Okay. In that case, you don't look anymore for trend line, but you look for the market structure. Okay. Sorry. Let's look at the other example. And let's move to GBP USD. Same story here, same exact story. Let's look at it from that perspective. Okay, again, here we have lower high, lower low, lower high, lower low. I believe with such candle, with such strong candle here, okay, let me remove this, with such a strong break with this candle, a lot of people will say, okay, it's a time right now to, buy. Let's say I will buy from here. I will put my stop loss somewhere below such strong candle, and my take profit would be, I don't know, somewhere here. And you see, guys, what happened straight away? The market come, and right now those people are actually in drawdown. What you could do, again, you can use Fibonacci right now, and you could be entering from the 78.6. So in the time those people are losing, you could be actually, by entering from here, let's say you will have 30 pips stop loss, okay, while those people are losing, you could be in around 2.5% profit. For us anyway, we didn't get into this trade because of the news. It's one of the very important rules, is not to trade around the news. But just I wanted to explain you how you can, by understanding the market structure, how it can save you a lot of money, nerves, and time. It's very important. Please follow that. If you have any questions, let me know. And yeah, cheers, guys.